Good afternoon. Welcome to GrainTV. It's January 23rd, 2014. I'm Logan Burgess. From our right here is Cody Bills to help break down a relatively mixed trade in Chicago. Let's jump into the quotes here and see where the grain settled. Corn was up 2 3/4 on the day. Soybeans down 2.5 cents. A highlight of today's trade session, though, was the wheat market. Chicago wheat up 8 3/4. Kansas City wheat picking up 7.5 cents. As I said, Cody, a lot of focus on wheat right now. What was driving things higher in that market?
You know, we talked about wheat yesterday and the cold weather having kind of supporting or slowing down the rate at which wheat was declining. Well, today wheat popped here, and I think it really had to do with the fact that we did see Saudi Arabia come out with a tender to issue for around 660,000 metric tons. Combine that tender along with the other demand that we've seen around the world. We saw Algeria, Iraq, Ethiopia, Taiwan, Japan, all in the market, either purchasing wheat or having already purchased wheat. Right. The bottom line here is we are seeing a little bit of demand pickup, and that's some of the reason why we traded higher here this morning. Now, next week we should see very cold weather again in the earlier part of the week. We should see some snow over the weekend. That'll help insulate some of the Midwest, but other areas will still be susceptible to some potential freeze threats. Yep. The bottom line here, I think with the amount of selling that we've seen in the last couple months, I think that the wheat market has the potential for some short covering. I think we have some potential to move higher here, but all in all, I think this is more of a short, a short covering rally. Yep. I would suspect that we'd get down around these lows, but in the meantime and in the shorter term time horizon, I think we have some upside risk here.
Yeah. If we take a look here at corn, let's quickly look at what we saw out of ethanol production figures here today. Corn had a relatively quiet day, but I think it's important to look at the ethanol production figures that we got out here today. Take a look at the chart we've been following throughout the marketing year. The black line details last year's production on a weekly basis. The red bars are what we're seeing this year. And you can see from this chart here, we had a pretty sizable rebounding in terms of average weekly production for U.S. ethanol, up to 905,000 barrels per day. One thing that's been helping to support weekly production here, or particularly last week, was a DDG market, which seems to be firming here. Take a look at this slide. This shows 10% DDG prices in eastern Iowa, and you can see there was a dramatic decline in prices following the Chinese cancellation of U.S. DDG shipments. That really took about 25% off the price there. That's not good for the ethanol crush margin, which really helps drive weekly production. So I think when we see a firming here in DDG prices, that is helping ultimately the weekly production figures. I do have a couple concerns, though, about ethanol production here moving forward. We have seen a firming corn market following the numbers released by the USDA on January 10th. And additionally, right now, ethanol stocks are sitting at the highest levels we've seen them since July. So both those two factors combined do not bode well here for ethanol production over the next couple weeks or a month. In short, I would say I would not rely on ethanol production here in the near term to support the corn market.
That sounds fair enough. Guys, keep in mind the export sales, a key measure of demand here, which is normally reported on Thursday, will be reported Friday. Here's the export expectations we have for corn: 250 to 650,000 metric tons, soybeans 300 to 625,000 metric tons, and wheat 300 to 600,000 metric tons. We'll report on those tomorrow. Yep. If you have any interest in taking a demo of the OEC platform, the mobile trading platform, which we now have available through GrainHedge, visit grainhedge.com and take a demo there. We'd be happy to answer any questions you have. Give us a call at 877-472-4607. Thanks a lot for tuning in. We'll see you here tomorrow.